Everyone, David Coe of the Coe Real Estate Group, now with Equity Union. Hey, we finally have the numbers in from August, and I figured this would be a good time to kind of stop and take a look at where we are here in 2024. So I'm going to go through a couple of charts here, including looking at sales activity both in LA County and Orange County. But first, we're going to start off with interest rates. So here we are. Today is September the 11th, 9/11, and this is one of my favorite places for tracking the 30-year rate. It's Mortgage News Daily, and you can see we had a big jump just this morning, knowing that there was some actual data being released on inflation, which, by the way, inflation was down again, and that is not in these rates. So I think there's a good chance that we're still going to see additional drops, maybe even by the time you're reading this on Friday. So rates are down to 6.11%. That is as low as we have been since all the way back in February of 2023. And really at our peak, we were at 8% back in, this is October of 2023. So from a year ago, actually 11 months ago, we are now down on interest rates almost 200 basis points, which is good news. And then kind of looking where most people are projecting rates are going to go, I found this article, which is linked below, that actually has forecasts both for Fannie Mae and the Mortgage Banker Association. And this article was written about a week ago, so it's a little bit old. But this is back in August. We were at 6.46%. They were projecting we were going to get into the 5.9s, but not until 2025. Well, guess what? We might be there in the next couple of weeks based on where economic news is showing. So, but it is important to know that everyone is still projecting rates to go down, but they're not projecting a huge decrease. Certainly nothing like where we were back in 2021 and 2022. I think this is kind of going to be our new norm, somewhere in this 5% range. So let's look at how this is affecting our actual sales. So we've got two lines here. You can see the blue is Los Angeles County and the red is Orange County. And the first chart we're going to look at is the actual number of closed sales. And I think this is really the most striking chart that we're dealing with right now. Historically, we peak, in June, July, August, May. So usually kind of in the summer months is when we start to see our peak, because that's a lot of activity that's closing from sales that we got under escrow sometime in, April, May, and June. And then we usually kind of bottom out, February, January 2019, February. Usually the winter months is where we hit our kind of the trowel of the sales. Well, I think it's pretty startling to look at that our peak in May of this year is lower than where some of the trowels have been in previous years. So we are still at a fairly massive reduction in the actual number of transactions. Year over year, we're only down a couple of percentage points, but this is something that when we go back and look at where rates have kind of been so high here for the last couple of years that a lot of home buyers have just been sitting on the sideline waiting for rates to come down. Well, the rates are starting to come down here. So at the meantime, I'm going to look at active listings, and I'm going to start off first with this long range, which goes all the way back to 2008. And, we can see that historically, we kind of looks like we're still fairly low on inventory, which is true. But when we kind of zoom back into the 5-year mark, you can see that really over the last year, we have really been building an inventory here all the way since December of last year, with almost 13,000 homes for sale in LA County and, almost 4,500 homes for sale in Orange County. And then when I look at pending sales, man, this is drastic. Sales have just dropped off a cliff, which means that probably the numbers we're going to see in September on closed transactions are going to be way lower than where they were in August, just because we haven't had a lot of homes drop in escrow over the last couple of months. Consequently, days on market is building. We're still in a fairly robust, less than 30 days to be on market. But I think what's interesting is month supply is really starting to build because we kind of have both an increase in homes coming on a sale and a decrease in actual number of buyers out there looking for a home. And the spread, you're really starting to see this in the days on market. We are up 27% in LA County as far as month supply year over year, and almost 33% in Orange County. And then lastly, we're going to look at sales prices, which, again, we're finally starting to see a bit of a break on sales prices. Sales have dropped. The sales prices have dropped, for 2 months in a row now, both in July and August. So it looks like we're going to peak in this little cycle somewhere around May or June. And I think a lot of it has to do with really when you look at the increase in active listings that we had in April, May, and June. So as listings were going up, because we didn't have a ton of demand, prices are starting to drop. And we are seeing that right now in a lot of the markets that we're selling in. It's turning in a bit into a buyer's market. You would assume with rates coming down as drastic as they are, that we would start to see an uptick in demand. And I think that's about to happen. There's a couple of things I think people have been waiting for. Number one, there's a big Fed meeting next week where the Fed is expected to lower their Fed rate a little bit, but a lot of that rate is already baked into what we're seeing with the current interest rates. And quite frankly, the election is still right around the corner, and I do think a lot of people are kind of waiting to see what happens with the election before they make a home buying decision. So if rates continue to drop, as everyone's projecting they will, I don't think we're going to see a big uptick in activity until the first quarter of next year, which means if you're a buyer right now, it could be a buyer's market for the rest of this year. But moving into next year, if we hit into the fives early next year in the spring selling season, it could very quickly swing back to a seller's market. So there's an opportunity out there if you're a buyer, and if you're a seller, I think you have to have some realistic expectations that, maybe what your house would have been priced at 4 or 5 months ago, there could be a bit of a drop, not a lot, but a few percentage points drop from where you might be selling the house right now. So hopefully this information was helpful. If you want any specific information about how this affects your situation, I'd love to talk to you, someone from the team. We'd love to have a conversation with you. Please reach out and let us know. David Coe with Coe Real Estate Group. I hope you are doing well, and I hope to talk to you soon.